high-cost loan charges a higher interest rate or fees. Under HOPA, it's considered to be 6.5% higher interest than average prime rate for first mortgage or 8.5% for second mortgage. Higher priced loans, it's Regulation Z, it's closed-end secured by dwelling with APR, annual percentage rate, that exceeds the APO bar by a threshold amount. First lien mortgage APR can be 1.5% over APR. FHA loan, it's higher priced loan if it exceeds 1.15 over the APOR. With a jumbo loan, it's considered higher priced if it's 2.5% over the APOR. With subordinate loans, an APR of 3.5% or more over the APR is acceptable. When giving these loans, make sure you do not, one, rely on collateral instead of ATR, which is ability to repay, or two, rely on consumer assets without verifying, or three, impose a prepay penalty if payment can change within 4 years. Escrow accounts are required for higher priced loans, regardless of down payment or LTV, and lenders may not waive the requirement for escrow, taxes, and insurance. HLTV or TLTV is high loan to value or total loan to value ratios. The HMDA is the Home Mortgage Disclosure Act. It requires institutions to disclose loan information, and it helps show if lenders are serving their housing needs, and it sheds light on discrimination. HOPA, the Home Ownership Equity Protection Act of 1994, also known as Section 32, are for loans with high interests or fees. It's under the Federal Z, Section 32. Has additional disclosure requirements, prohibits giving credit without regard to consumers' payment ability. It identifies high-cost mortgage loans and provides consumers with protections. An amendment to TILA, it's from 1994, and it was amended in 2010 to include purchase money mortgages and open-end credit and purchase money mortgages, which I just said, refinances, closed-end equity loans, and open-end credit plans. And in 2013, added suggesting counseling. Balloon payments are generally forbidden except to account for seasonal or irregular income. If the balloon is part of a short-term bridge loan, that's okay too. No negative amortization loans, and there's limited prepayment penalties. May not refi into another HOPA loan for a year. A high-rate loan under HOPA may not be set up as a home equity line of credit if it's a closed-end loan. HOPA does not apply to reverse mortgages, constructions, timeshares, non-owner occupied, and not primary residences. All right. Homeowners Protection Act of 1998 requires termination of PMI at borrowers requested, or it's mandatory. Housing expense ratio. It includes the MIP, flood insurance, homeowner association dues, and for conventional, it can be 28% front end, 36% back end. For VA, just 40% back end. And for FHA, it's 31% front end and 43% back end. The HPA is the Homeowners Protection Act, and it is for canceling PMI, aka, or also known as the PMI Cancellation Act. HPML, the higher priced mortgage loan. Consumer credit transaction insured by consumers by principal dwelling that exceeds current loan amounts for a jumbo loan. It's considered higher priced if the APR is 2.5% for FHA. HUD, Department of Housing and Urban Development, provides development assistance and everyone has access to housing. That's its goal anyway. Started in 1965. Has authority over the FHA. Hypothecation is pledging an asset for a loan or mortgage. A hybrid ARM. It begins with a fixed rate, then follows a variable rate that resets based on loan terms. Okay. Initial escrow statement must be given at closing or within 45 days of closing and every year as well. Installment credit, an example would be like a student loan. IPC is interested party concessions. Can be paid by builders, real estate agents, and other parties. You can give a 9% down payment, you can give 9% concessions on a down payment of 25% or more. You can give 6% for a down payment of 10% to 25%, and you can give 3% concessions if the down payment is less than 10%. And you can give 2% concessions for investment properties. A jumbo loan. It can be non-qualifying mortgage or qualifying mortgage. Usually requires a 700 plus credit score. Adjustable rate mortgages are popular with jumbo loans. Interest rates are comparable, but the borrower may need more assets. A loan is considered higher priced if it is if the APR is 1.15% higher. With subordinate loans, it's considered higher priced if it's 3.5%. Lender credits is credited to buyer for accepting an over par rate. Kickbacks or referral fees are under Section 8 of RESPA. LIBOR, it's the London Interbank Offer Rate, globally accepted interest that indicates borrowing costs between banks. Loan level price adjustments, which means the more risk you have, the more you pay in interest. Loan flipping is repeatedly financing a loan so lender can collect more fees. Loan originator can assist with application, arrange credit, explain and negotiate credit terms, collect info, evaluate finances, describe loan programs, fill out application, provide disclosures, process and submit loan asks, and assist borrower with decision-making and closing processes. Loan Originator Compensation Act was under the SAFE Act of 2008 under the Federal Reserve Board. Loan processor assists loan originator with clerical duties and paperwork in process, verifies information, keeps the LOS and the AUS updated, coordinates with the underwriter, the MLO, and the title company. Loan servicing is between consumer and the lender and is something that is done on behalf of the secondary market participants, but not by them. Loan underwriter, it evaluates application and determines risk. The LOS, the loan origination system, or the loan origination software. Loss mitigation application. It's when a borrower asks the lender for this to do a remedy like a short sale or a deed in lieu. The lender has 30 days to respond. Lender must halt foreclosure during this time. And that, once again, that's the loss mitigation application. The loss payee is like when the lender is added to the insurance. LPA, Loan Product Advisor. and that's the system that Freddie Mac uses. LTV, just loan to value. LPA is once again what Freddie Mac uses. Mandatory termination point is when PMI must be terminated by the first day of the month following the loan's amortization midpoint, providing the borrower is current. MAP rule. It's similar to UDAAP, and it's an Federal Trade Commission regulation covering advertising. The rule also prohibits lenders from seeking a consumer's waiver of rights under the law. It sets specific record-keeping requirements and authorizes states to bring actions under law, called Mortgage Acts and Practices Advertising, and it's the MAP rule. MARS, Mortgage Assistant Relief Services. It makes it illegal to charge upfront fees. MDIA, the Mortgage Disclosure Improvement Act. It's when lenders must make all changes as a result of an APR change and must wait 3 business days before consummation. The 3-day rules are only if changes occurred because of an APR error. APRs are accurate within 1/8 of 1% on a fixed rate mortgage, and they're accurate if they're 1/4% on an APR.